caught up with Manchanda of Dr. Lal's and Prashant Nair, the Pharma Analyst at Citi. Let's listen to this interesting conversation where Ekta began by asking if the diagnostic space was seeing investor interest as a result of less regulatory problems for this sector.
Well, I think these factors, like whether there is FDA compliance issue or not, are more near-term issues at this point. That is a focus for investors looking at the pharma space. What we are particularly, enthused about on the diagnostic side is that it appears to be a multi-year kind of growth industry. There is very low penetration in India. The organized sector is gaining share, but still has a long way to go. And when you put that together with the fact that it's an asset-light way of playing the healthcare delivery opportunity, it just looks like a good opportunity, irrespective of whether you compare it with pharmaceuticals or not. So I think in its own right, it looks like a very attractive business from a growth standpoint, and that's what we like about the business.
We're just coming fresh from the news of some other diagnostic company, Thyrocare, which is also listed recently, and about alleged cuts being offered to doctors as well. How would you view that from an industry perspective, Prashant?
Okay, so I do not cover Thyrocare, so can't comment about a specific issue. But so anecdotally, we have heard about things like doctors being incentivized to write tests. What we try to figure out is whether a company can build a brand that is strong enough to be able to attract business without having to resort to incentivizing doctors, and that's the other thing which we look for when we look at any business, be it on the diagnostic side or on any other business. As long as the franchise is strong, then I think in a growing industry, it's not very difficult to grow in a normal way. And so that's what we look for. I do not. It's a bit difficult to comment on the industry as a whole because it's such a fragmented industry. There are so many small players it's difficult to know all of them. So when we go to talk to a business, we try to evaluate whether the brand is strong enough so that these things are taken care of without incentivization.
Okay, Mr. Manchanda, how would you react to this in terms of allegations of diagnostic companies in general incentivizing doctors in some way?
See, as Prashant mentioned, that it's highly fragmented industry. One hears about such practices. It's very difficult to comment on one specific issue. However, we as a company have focused on building a brand, direct-to-consumer focus. We have created a very strong brand pull. Our focus is on B2C. Very large proportion of our business comes through direct-to-walk-in patients. So that's the way it is. And essentially, our focus is to convert unorganized space to an organized kind of industry.
Okay. Prashant, the big trigger for diagnostic companies or the big differentiator is the growth factor, the footfalls, the 20% growth per quarter. Do you think that would sustain? What are your targets for FY 17-18 as maybe competition rises?
Okay, so we, at this point, our forecast built in close to 20% top line growth every year or for the next 2 to 3 years for Dr. Lal's. The industry is still quite young. It's not very well penetrated. I think given the way the disease mix in India is changing, awareness is rising. I think there is still a lot more scope for penetration of testing on the pathology side to increase. So I don't think growth is going to be a meaningful constraint if execution is good, at least over the medium term.
Okay. Mr. Manchanda, what about you? You haven't given a formal guidance in terms of growth, but you've said that you could surpass the industry growth. What is industry growth right now, and by how much would the margin be in terms of surpassing it?
See, the industry is growing at about 16 to 17%, and diagnostic particularly is much faster than overall healthcare because that's growing at about 12%. And the reason for that growth is more and more testing is happening, medicine is becoming more evidence-based. So there is a very high growth rate for diagnostic in general. There is another level of growth which is coming for organized players because they are able to shift from unorganized to organized. So that is the reason for very high growth in this space. As far as the margins are concerned, we have had a track record of about 27.5%. This year our margins have been about 27.6%. We are planning to actually expand our central lab network in Kolkata as well as in Lucknow. So we believe that we should be able to sustain these kind of margins with a bit of a drop in the short term.
Okay, that's a word coming in from Dr.